What on earth is going on with mortgages? Now, that's a question both you, I, and most people out there are now asking themselves. Unfortunately, because of the unrest in the Middle East, it's actually having a catastrophic effect on the UK residential mortgage market. So let's just crunch some quick numbers as to what that means for you. If you look at the average 2-year fixed rate this morning, it's 5.35%. Now, if we trail it back a bit, the actual rate was a lot less just a week or so ago. So if you look at the average repayment you would get on a mortgage, you might not think that would be too much of a difference, but actually it is. If you were to take a mortgage out last week, the beginning of last week, and you were to take it out now, it's around £80 per month more on your repayment. Now that's a lot if you think about the fact you're going to have that over the next 2 years. So that's the actual crux and the reality of what's going on with mortgage rate pricing. But it's not just pricing, it's also product availability. And we've lost almost 1,000 mortgage deals, again within that space of just over a week. It's very frustrating, and if you actually look at the overall impact of where we're looking on interest rates, that's the sort of thing we would call swap rate market. Now, I'm not going to go into what swap rates are because, again, you might not care, but the reality of the swap rate market has an effect on fixed rate mortgage pricing. And unfortunately, over the last month, if you look at 2-year swap rates, which can cascade onto 2-year fixed mortgages, they're around 1% higher over the last month. So that just shows you we've still got a little bit more volatility to come. We're probably going to get more rate increases. We might also get variable rate deals like trackers change as well. We may also get product volumes also reduce with lenders, perhaps temporarily pulling their ranges just to try and figure out where they're meant to price them. So unfortunately, the volatility isn't going to be gone anytime soon. And what that can mean in the real terms is that we could start to see what we would call rate inversion. I'm not going to go into it too much because it's a little bit boring, but if we go back to the mini budget, what happened with fixed rates then because of UK fiscal policy was that your 2-year and 5-year fixed inverted. Normally you would have one lower than the other. Unfortunately it changed and we had that going on for around 3 years. So if we start seeing inversion again, it will be the first time we've had inversion caused since the mini budget, which is just not good. It's not good for the market, it's not good for lenders, it's not good for brokers. So I am in a bit of a tiz right now. There's a lot going on, and we just have to stay calm and hope that things will change for the better. But in the short term, you really do need to seek advice. If you haven't got your mortgage yet, you need to search online right now and try and find a good mortgage for you. At the moment, there are some fixed mortgages around 4%, but I'm saying 4% on average around because a lot of the sub 4% are gone. So if you are looking at a lender that's offering around 4%, that is a really good deal right now. Get some advice. And if you want to contact us for the latest averages, the best rates, product counts, please do get in touch with Moneyfacts. You can contact us in the press team. You can check out our latest trends on the Moneyfacts Group website. And you can also visit our comparison site, which is moneyfactscompare.co.uk. That's the best place to go if you're a consumer and you're worried about rates and you want to find a better deal. But yeah, let's see what happens over the next few days. I hope this video has been helpful. Obviously do put a comment if it has been. Don't forget to like, and hopefully this will help. Yeah, get in touch if you need anything else. Thanks very much.